I suppose there are a lot of circumstances that could force those who already own a home to move, but not many of them are felt more directly than a crowded house. So today, we're going to talk about how homeowners who find themselves in this situation can move up and out before selling their existing home, a scenario that we describe in the lending industry as having a departing residence. Have an idea for more space for you and your family, but struggling to envision just how you'd achieve it? Don't dream it's over. Let's learn how to rock a departing residence starting right now. Hey guys, welcome to Rockin' Real Estate. I'm Rob Spinoza with Guaranteed Rate. If you're a home buyer, a homeowner, or even a real estate professional looking for home finance tips, tricks, and the occasional cool guitar licks, I've got your backstage pass to a better understanding of the mortgage business. Those who are looking to buy a new home but find themselves in a situation where they cannot sell their existing one first face two immediate challenges. Number one, how to come up with the down payment before the sale of the existing home. And number two, how to qualify for the mortgage on a new home when they already may carry a mortgage payment or at least some form of a housing payment on the existing home. We're going to focus on the second aspect here, how to carry the debt on the new mortgage, because we'll focus on the down payment piece in a separate video which you can find on my YouTube channel, Rockin' Real Estate. It's safe to say that most homeowners in America are already working extra hard to afford one mortgage payment, let alone two. And from our standpoint as a lender, we can confirm that our borrower's debt-to-income ratio, or DTI, would be excessive if we tried to add a new and often larger mortgage payment on top of an already existing one. So in these cases, the obvious place that buyers look for qualifying relief is to consider renting out the house that they're moving out of. And while this can work well in theory, in practice, lending guidelines make it difficult and even risky to suggest that the departing residence will be rented out. Here's why. For most qualified mortgages, or QMs, which can include conventional, jumbo, and even government loans, in order to use proposed rental income, you will often need an executed one-year lease agreement before you can get a full approval on your new loan. No, the renter does not yet need to be in the home, but while you're in the approval process for your new loan, your lender will request a copy of the executed lease agreement, and they may also ask for proof that a security deposit from the future renter has been cashed. And that's not all. Some mortgage programs, especially jumbo loans, will also require that the departing residence has a loan-to-value, or LTV, under a certain threshold, typically 70 or 75%. And still other lenders will require that in order to use rental income, you, as the owner of the departing residence, already have landlord experience. So in addition to these very real hurdles, buyers in departing residence situations need to understand that even if they can meet these requirements at any specific moment in time, they cannot be sure how long their home search will take, perhaps taxing the patience of any future renter that they've already lined up. And buyers may be required to commit to a purchase contract where part of their loan approval relies on the whims of a future tenant, an unenviable position to say the least. So how do departing residence buyers take back control of these situations? Fortunately, they can use loan programs that were developed specifically for these scenarios. For example, these programs would allow for an appraiser to provide a rental survey that would document how much the departing residence could rent for. And for those who plan to sell their existing home after they acquire the new one, some of the departing residence loan programs will allow us to remove the housing payment on the departing residence altogether if we provide a listing agreement, for example. In short, departing residence programs aim to get buyers out of the trap of not having sold first and make it so they can focus exclusively on the purchase of the new home. So if you've been told you don't qualify for your next home until you sell your existing one, let us know. Should you have any questions about departing residence mortgages or about any other aspect of the mortgage process that will get you the financing you need, don't hesitate to get in touch at any of the links below or by calling us directly at 415-367-5959. And if you found today's video helpful, please click on the like and subscribe buttons below and we'll keep the hits coming.